Good evening, Kenneth Torres Capital, Nightly Strategy Podcast for June 15th, 2024. Happy Father's Day. We'll start right off with the sniper trades of the day. All right, so this is PBW on 10-minute. Gap down, big blue box is the OR10. Next bar breaks out below, so we get our standard short with a standard risk box, moves in our favor. After the R10 reverses, we take a 1-bar high exit to cash 2R. We reshort on a rejection of the dragon. We exit when the RL10 crosses the PSAR, and we net 2R total, well, almost 3R, excuse me. This is EWW Mexico on the 10-minute. We get an OR3 breakout. It reverses quickly for a half-an-hour loss. We stop and reverse. We collect a third of an R of gains. We stop and reverse. Collect an R. Reverse after it crosses the Bollinger Band main. Collect 1R. And that's it for the day. About 2R total. The traders. Hamad grinds in DIA for minus 0.9. Scratches and some grinding action in EWW. That was the theme of the day. Misses the second entry here, but nets 2.6 for a very positive day, taking advantage of the move inside Brazil. Well done. This is Brian, nets 2.5 on the standard Kata 2, misses the second and third legs of those trades, but still brings home 2.5 for the day. Good work. George grinds out minus 0.4. I like all of these trades. Maybe there's a re-entry involved here. The only one I can think of an improvement in is probably this full exit instead of taking a full 0.8. He might have been able to get out when it leaves the dragon. Again, probably stayed too long on the breakout. And then the stop and reverse would have made that a very positive day. This is Jonathan grinding the stop and reverse here, as he notes, makes this a positive day. The stop and reverse here, he wanted to get paid, he got whipped out, re-enters. Now this is this re-entry is not needed. The re-entry should be here, and then we should be making that a positive trade after the R10 reverses. The exit is in here. This was just some chop he got caught in. Kevin gets paid 3 times for a net of 0.7 on the EWW 10-minute trade. Nets. Yeah, this looks like about 0.8. 0.5 for the DIA on 10 minutes. So that's good work all the way through. And Satya brings home 7.3, trading 3 minutes on EWW almost perfectly. This is really well done. All right, let's take a look at the weekend reports real quick. Bullish normal, strongly overbought, favorable volatility. The ETF2 theoretical model noticed weaknesses in the global ETFs, and so it's taking a preemptive 30% exposure only, so it reduced exposure quite a bit, even though we're at all-time highs inside the US models. a reflection of weakness in the globals. The regression line fractal framework, all signs point to yes, all looking good. The 3-day and the 9-day are all well above the dragon, and the PSARs are favorable and pushing all-time highs. The 150-day look back is closing within pennies of an all-time high, and this Kata 2 and second Kata 2 both have paid off well. We've got some carefully calibrated stops in here, as you'll see on the next chart, geared towards skin of the dragon, spine of the dragon, southern skin of the dragon, previous resistance at the RL10 peak, PSAR, Bollinger Band mean, and then the previous belly of the RL10, and then the 10-day low. So calibrated steps on the way down. Those are also targets if we start seeing a sell-off. The 30-minute bar, 3 days of just consolidation after the big run up here, and tech is leading the way. This is postured for a very interesting opening to the week. Tech, SPY, and emerging markets in the lead for ETF 13. ETF 32. Silver had a nice little recovery, but mostly it's tech. DBA, the agriculture commodity, is having a very interesting move too. And Dow Jones US Real Estate IYR with a nice dividend, maybe making a turnaround. Sorry about that. In the Dow 30, Apple and Microsoft and tech really leading the way. Walmart not far behind. Home Depot, this could be a nice value play, a nice turnaround here from this week. Some new entries in the green and white category here. New leaders emerging, mostly in the areas of tech and India. We'll go to dashboard 1. So buy on dip opportunities in a couple of the globals and in mid caps as well. Volatility is very favorable, as you notice over here. In the Dow Tactical, we had some weakness in DuPont and Devon Energy, real strength in NVIDIA, just crushing it. ExxonMobil weakness in the energy as well. In the ETF Tactical, mixed bag, strength in the Qs and treasuries, but weakness up here in Euro-Asia, lithium, marijuana and clean energy, and metals and mining. So this is a shift in market leadership away from those symbols that led the way on the way up and have handed off to tech. It was such a narrow range day on Friday. They got a ton of really quality auto framers here. So this is a buyer's market. Lots of globals and energy in that lineup. Some pinches in tech, Intel, Disney, and the Qs that are worth noting. McDonald's too, I would add. still being dominated by the winter. Marijuana, Tesla, clean energy, Nvidia, Intel continued to dominate the trading value range. And what we want to look at in our integrated view of the moving RLs is grinding its way higher in spite of opportunities to fail. Still very much a tactical market. We're poised for a volatility spike. It's becoming increasingly mentioned in the professional tech and the professional media. And we're going to keep following price, but really respect our stops here and look for tech leadership to continue. Take good care. This is Ken at Tortoise Capital. Keep your risk measured and powder dry. Hat tip to all the fathers out there.